Welcome to TradeTheNBI.com. This is John's reports for the 29th. So we're getting close to the end of the month, and it's interesting because every day you're hearing about the recession, but the data is just not matching that claim. So it's a problematic situation for those that are so desperate for a recession. We kind of flatline base here with the red DOC. We've had orange falling so that it could come underneath, which will actually produce a buy signal once the green crosses above red. We're pretty close to there. We already had the early signs of the steel moving above cyan and crossing steel at the same time. When that happened, right about here on the down bar, we were right at the ABM green, which gave us a pretty good idea that we were going to hold that ABM green. We came back below it again, but then rebounded strongly off that the other day, and now you can see in futures, because of that rebound, once we got to the ABM yellow, which is where we kind of stalled for a fraction of a moment, and that's boom, allowed us to burst. So we hit the 38% overnight on the daily and continue to just climb. From our, I went a little too far with that one. Let me try that again. Yeah, and here's the 50K. So again, we had this brief spot here, and it had potential. We had the green moving above cyan, but as soon as the orange crossed above steel and steel crossed below, it was sort of done. And at that point, you were kind of just slightly at a negative break even. But then it turned around to produce the new buy, and it took it right there as we got the blue reading here. We moved to positive shakeout off the additional P2 pivot, and that's what's led to the current. Let's see where it's at. Quick little performance report, can't hurt for us. We're just off the equity highs because of that last dip, but just phenomenal for the year so far. And currently that's about almost 45 more thousand, so would put us pretty close to being right back new equity highs as well. So all in all, good stuff. So are the adjustments that I've been making to I can show you on another 50K that we're doing here. It's the exploration with the dots in the developing trend, and also allowing us to avoid some of these softer setups. Not so much avoid them in the sense that, yes, there's still going to be a buy, but it's going to get us out earlier when we have the clear signal that the trade is fading, and that way we're not waiting for the color change for an extended period of time. And so it will probably move a little tighter the starts of shorts. I think it'll be an added bonus, but you're not going to notice anything other than the paint bar colors will just be match and be very nice. So that's a good thing. But we'll continue to follow those adjustments, and if there's something that I have to go over with about them, I would certainly do it, because I'll point out some of the changes that we make in order to show you how the DOC you can effectively see those changes if you want to understand and follow how they go. Otherwise, you can just go with the colors. From a NASDAQ standpoint, likewise, it's pretty close to the same. It's looking pretty healthy. It's well above the 50% right now, almost equal to exactly what the S&P is doing. So kind of got a uniformity. There's a little softer readings from the NASDAQ as far as DOC reading, but not too significant as to be problematic. Boris Johnson announced that he was going to suspend Parliament and put them on hiatus, which will make it almost impossible for them to block a no-deal Brit exit. And that has got some people freaked out, because that means that the EU is either going to have to capitulate to come up with some better terms, or it's just going to fall out of the EU is just going to get one less member without even trying, and then I'll lay into question whether or not Britain would pay the exit fee, blah 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 blah. So the euro is all part of just the euro is in trouble, and it's a precursor for things to come. I mean, you have rumblings in Italy. You've already had them in Greece. Certainly, some of the Eastern Bloc portions. They're deciding to band together to go after some of the policies of the EU and that. And so that's only going to create strife, which is going to be more economic problems, particularly if Britain leaves, because they will sign a deal with the U.S. for trade, and that is going to really put a lot of pressure on the EU from a convenience, because they're not going to be able to get away with adding tariffs. They're not going to be able to get away with blocking migration, because it means a ton of money to all of their EU partners. So it's sort of foolish to think that it's just going to be this mess and horror, because if it is, that's because the EU decided it, and not because it had to be. From a USO standpoint, shock-a-rama. Despite the talk of the recession, oil, big drawdown. So somebody's using up that oil, and you don't do that unless things are kind of humming along economically and you have record production. So this really confounded a lot of people, and indicates that potentially some of this talk about a recession is just premature. And gold proving the exact same thing, because if we were going to be suffering, gold might be getting a much bigger retrace. And this has just been a beautiful play for, quite some time. I mean, we were on this from the very beginning. I mean, it had kind of gotten into a malaise for a little bit. And once we started to see the breakout dip here, DSC red credit, and boom, it's been slow, but it doesn't have to be, as long as it's just in that beautiful trend. Who's to complain? It's just one of those nice deals. So from an ES5K standpoint, let's wait for that to get caught up. We had a little bit of a muck period right through here as we were kind of just consolidating right around the 2870. We took a slight dip below and started to produce buy signals. Of course, I don't necessarily prefer the first one. I just usually see it as an opportunity. If you get it early, for me, right around the 38%, I usually start getting a little bit concerned, because I need to see not only my green cross over, you got to have the red DOC moving into a new zone, and at that point, then the first thing I'm looking for as a warning, and it happens often, it almost happened right here. It's the steel crossing below cyan at the same time orange crosses above steel. That's sort of like the end trigger, and when you see that within a buy configuration, it usually is your warning. In this case, it's pretty much right at the net zero part. And that just created the reset, and we ended up with a higher pivot. Overall, you can see even from just looking at the shakeout there. And then the dip below, that created the green pretty much at the exact same spot. So not really a big thing. And then it just took off. We made it to the 70, flattened out for just a little bit, made it to the 80. That was a little bit of resistance, and once we broke above the 80, that became the floor. Reached just a fraction overnight, and then we started to really take off here. Because, what's the resistance? From the 80, once you're above, there's nothing here until the 2905, kind of fluctuated across that, and now we know that the 23 range is next. So this is the same story we've been talking about for a week plus. We're in the same ranges, but boy, we've had just a fun ride, back and forth, up and down with this. It's been just a pleasure. I don't remember August this beautiful, so no complaints. As always, though, I will update you. I'll be sending out indicators for the weekend. They will have the updates that the DOC paint will have, as well as if I'm able to adjust a couple of the items from the Opus 2 for the strategy, but I will certainly let you know if I've made that change so that you can see the differences between them. Trade well. We'll talk to you later.